It was definitely no one knew what was going to happen. That first March of 2020, world shutting down, and you're like, oh my God, are we going to go out of business? And I think
Welcome to the next episode of the Entrepreneurial Excellence Podcast. It is with great pleasure that I have Henry Shi with me today. He is the co-founder and board member at Super.com, which I believe has like over $1 billion in sales. I know it's like crushed it completely. They've grown into a pretty massive company. And Henry and I were actually catching up a few weeks ago and just started jamming on like, what does it mean to be an entrepreneur in the age of AI? What does it look like? What do the next great startups and businesses look like if you use AI as the foundational layer to build your business? And we just kept going. And I was like, oh my God, we just need to pause this right now and get on a podcast and actually talk through this so everyone else can listen in. Henry, welcome to the show. Thank you so much for being here.
Yeah, thanks for having me.
And just to check before you just give you more bona fides and like how people understand you, you're also like looking at your background, you're a 3-time founder. How many companies have you founded?
Yeah, that's right. Well, if you go way back to like end of high school and undergrad days, 3 companies. First company, I didn't know anything, didn't solve a problem, didn't make any money. Second company, you solve a problem, didn't make any money. And the third company, you solve a problem and make some money. So trying to learn each time and get better each time.
Okay, so we're going to talk a lot about the lessons you've learned. Before we get there, though, I ask a question to start off every podcast right off the bat, which is, we're called entrepreneurial excellence. How do you define excellence as an entrepreneur? What does that actually mean to you?
Oh, wow. That's an interesting question.
Start off strong.
Yeah. I think for me, excellence is just being, super passionate and master of your craft, like whatever perspective, vision, or point of view that you have about the world, and using your entrepreneurial talents, grind, hustle, dedication, commitment, resourcefulness, whatever it takes to bring that to life. Obviously, you have to learn, adjust, adapt to the market, but really just taking something that you really believed in and bringing that to life that maybe otherwise wouldn't have existed. I think that's maybe some flavor of entrepreneurship meets excellence.
I would agree, but that doesn't mean you're always going to be successful. So give your example. You talked about the first 2 companies you had were not really big successes. You were presumably passionate and energetic and excited by those ideas when you built them. What do you think was the difference between those first 2 and what Super has become?
Yeah, well, the first one, I really just didn't know what I was doing because I was 19 at the time. I got accepted into this accelerator program. It was like part incubator, part accelerator, part leadership development. And it was my first foray into running a tech company. So, everything basically, even like the lean methodology, solving customer pain point, I didn't really know. So we had some thesis on using online massive courseware to do corporate training, but we didn't talk to enough customers. We didn't know, we just didn't know anything. We were just 19 and figuring stuff out, but it was a good learning experience. And then next time around, I was in I think maybe sophomore and junior year at college, and we were building a social local mobile network to help people meet and connect. Right. So I've
seen so many companies that I think everyone in college is like, I want to help people meet up. And
exactly.
It's like the proverbial dating app. Everyone wants to build a dating app because they have trouble getting a date. And I feel it's the same thing with people like, let's do a meetup app.
Right. Exactly. So yeah, it definitely very much is but at least it solved the problem. But this time we didn't really know how to make money. And we through that process, we started off helping people make friends and meet. And that was okay, but that wasn't really a huge pain point. But the huge pain point was around dating and so that side. So we pivoted into a more of a...
Oh man, I didn't even know you pivoted to a dating app. Is that what you're going to tell me?
Well, it's not really a dating app. It became like Tinder meets Yik Yak. So like semi-anonymous photo sharing for your campus. All right. So you can imagine going pretty viral, especially there were a lot of people sharing gossip, news, and hooking up. And I was like, nothing wrong with that. But
how fast did it devolve into dick pics?
Pretty fast. We had content moderation and we had sort of people moderating, but it was still, it was just, kind of part of human nature. I was like, nothing wrong with that, but I was like, I wasn't sure if I want to spend the next 5 years of my life helping people share gossip and hook up. So I decided to take a step back, kind of figure out what I want to do. And it was also really hard to monetize. Like we had a lot of eyeballs. We had a couple million page views a day. but it was just really hard to figure out a way to monetize that at scale. So decided to take a step back. I worked at Google for a bit, then realized big company wasn't for me. A lot of bureaucracy, a lot of smart people, a lot of red tape. Wanted to go back to it, but that's when I started most recently Super.com.
And okay, so explain to people what Super.com is, and then we got to talk through like what you did differently with Super.com.
So Super.com is a all-in-one app that helps customers save and earn money across a variety of use cases, including things like discounted travel. We have a bank account, card, credit building, cashback, rewards, experiences. Really, it's all in one app, and these analogy is kind of like American Express for everyone else. So people who are lower income, lower credit, help them save money, earn money, get access. But there's no credit check, there's no income requirement, there's no interest, really to make it accessible for people who actually really need to save and earn money, to give them the opportunity. That's kind of what we are. And in terms of the lesson learned, I think it's this time around. I was really intentional about solving customer pain point and sort of iterating based on the customer pain point and using frameworks that allowed us to not only find PMF, but then also have a way to monetize and scale that as well.
Okay. So a lot of questions coming from that. Before we do though, give a little bit more detail on Super. So like how big is the company revenue wise, team wise, all those things, like at least the high level stuff you're comfortable sharing publicly.
Yeah, sure. So we're about 250 employees, about 150 million revenue a year, profitable, growing. So it's a great company, and we have very well diversified revenue stream across variety of use cases. So that's been great, doing great.
Okay, so then walk through, like, first off, how did you get this idea in the first place, right? So you're a few years after college, wanting to getting the itch, didn't like the big company stuff. And you're like, I think I'm going to go take on all these other companies that have tried to do financial services for Americans. I'm going to go take this on and just build something bigger and better. Like that seems like a pretty audacious goal in a saturated market.
Yeah. So I think the irony here is that nobody just wakes up and says, I want to build a super app, and no consumer wakes up and just says, I want to go use a super app, right? So it really is a expansion of our mission, vision, and product lines over the years as we build more use cases for our customers. So what people want is, they have a problem and they want to solve it, right? And what we offer is a way to solve that problem, but then ways to help bridge that to expand to other use cases as a way to cross-sell and retain them with that ecosystem. So where we started actually was I met my co-founder through a mutual friend who also went to Waterloo, and he had sold his last company. I was looking to do something new, and I was looking to do something new as well. So we just got along really well in terms of common values, beliefs.
And this is in person in San Francisco, or like during COVID?
This is 2015, 2016. Okay. As in person in SF. And then we were just like, I quit my job on a Friday, exactly after 1 year. The day my stock vested, and he joined me in SF, and on Saturday, and we just hit the ground running on Monday. Right. So yeah,
hold on. But did you guys do, besides like mutual friend intro, you both went to the same university? Cool. Did you do any other like co-founder dating? Like, I feel, one of the biggest reasons companies fail is because the co-founders have a breakup. They might think at the beginning, like, oh, we're wonderful, we're great match, it works well. A lot of times it doesn't in the end, especially if things get tough. Did you guys do any sort of pre-dating to figure out if you're really a match?
Yeah, we did. So we spent a lot of time. I mean, I was doing co-founder dating for about more than half a year while I was at Google. So every day I would come home and meet people and get on phones or calls. So
you like made it a job. You're like, I want to find a co-founder, and I'm going to get essentially like, it's like dating. I want to get good at dating. I want to meet somebody. Therefore, I'm going to spend a lot of time working at it and improving my game, essentially, and knowing what I'm looking for.
Yeah, but I think as an engineer, like I think it's a little bit easier because folks are always looking for people who can build. So it was more just about finding the right partner and then really understanding kind of the values, kind of what you're aligned on, what you want to do. So yeah, I spent about half a year founder dating, and I met my current co-founder, Super.com, the mutual friend, and we just spent a lot of time building stuff, testing things, iterating on things, ideating, and we had common values, beliefs, ideas, and goals, and we're just like, hey, let's just do it full time. So we did.
What were the qualities? Sorry, you keep interrupting, but like, what were the qualities you were looking for in him or just in a co-founder when you're like, these are the things I need to find? Because obviously you did this well, right? To build a company as big as Super, you dated well. Married well.
Well, I think it was also a lot of hard work too for all of us. But yeah, I think it was just understanding what skills are complementary, understanding where you can help each other and fill in the gaps, and then also where you have common beliefs, values, alignment. And we both wanted to build a pretty big company. We both wanted to, move quickly, think fast. Sorry, think big, move quickly. We were, I think, open to feedback and open and good communication and clear. And I think we were both people who really trusted and respected each other and were very, I think, just had high trust. So yeah, it was a good partnership. And we just really, I think, enjoyed, gave each other energy, and just 1 + 1 equals 3 or more. So yeah, we started. So I quit my job. He joined me in SF, and we just hit the ground running. We were ideating for about half year, so we didn't have any.
Wow. Just like working together every single day for like 8-12 hours a day, and just like, let's come up with that idea, let's test it.
Yeah,
put it out to your friends. What did you do? So put it in the internet, see if someone's going to sign up. Like what?
Yeah, there's a bunch. There's different methods. There's methods for B2B, methods for B2C, but just testing landing pages, testing different ideas, doing customer discovery with B2B. So we tested a bunch of things. Ended up in the chatbot space back when chatbots were all the rage back in 2016.
Hey, they're all the rage again. Don't.
Yeah, exactly. We're kind of full circle. Right. So when we're doing messenger travel chatbots in the early days, and what we learned very quickly is that chatbots might be okay for people like you and I who are busy, and if you want to save, if you want to spend money to save time, but they're not very good for the average consumer who often has too much time. Like they rather spend time to save or make money. So we're like, you know what, forget the chat. Let's just focus on deals and travel deals. Did that for the first 3.5 years. And then
so it's just like travel deals, get a deal discount.
Yeah. For the first like 3-ish years, right? And then COVID, it was doing well.
Why were you able to do better at that than like Booking.com or Priceline or all these other companies that are also travel sites?
We spent a lot of time on the sourcing side. So we spent years just getting great inventory and deals across a variety of use cases, services, everywhere from distributors, wholesalers, retailers, OTAs, everybody, to get the best deals, bring inventory online. And then we just kind of had a good product experience, and we were good at growth and scaling. And so we had a pretty good customer flywheel. So we did that, and then COVID hit, and so that's when we expanded beyond travel. But that was kind of the early days.
Interesting. Okay, so were there any key learnings? Well, maybe let's finish the story, right? So okay, COVID hit. You need to expand the super app into more of a super plus-sized app that offers everything. How do you decide what industries to go into, what to do? What was it even like? Was it like existential? Oh my God, our revenue has disappeared overnight. Like COVID hits, no one's flying, revenue's gone. Were you guys freaking out, or you're like, all right, we got a plan, let's go iterate?
I think, it was definitely, no one knew what was going to happen, that first March of 2020, right? And world's shutting down, and you're like, oh my God, are we going to go out of business? And I think we were always good world-class operators, so we knew we could sort of execute and navigate our way out of it. But certainly it was going to be pretty rocky. So we got everyone together in the company. We focused on sort of just getting to profitability and efficiency. We did a lot of work. We actually wrote a blog post about this and how we navigated COVID. But yeah, we lost 80% of revenue overnight, but we buckled up and ended up rallying through COVID, and kind of came out maybe in the summer actually profitable. Right. So, and a couple of reasons. So one is we were just good operators and cut a lot of inefficient spend, and then also launched some new product lines and features, especially for essential travel. And another part is a lot of our customers didn't really care about COVID. So it's a combination of all three. We actually ended up being profitable and growing. So we thought, okay, well, there's a lot more we can do for our customers than just travel. There were people who were lower income, lower credit, who really needed to save money. And travel is fine, but you're traveling once, twice a year, and it's not high frequency. And we thought, okay, there's probably more ways we can help our customers save than just travel. So we raised a large Series B during the pandemic. We hired 100 people, became fully remote, got a bank partner. I would not recommend doing all that at once, but we did it. And
why not recommend doing it once? This is too much. But I mean, you do it differently.
It's just a lot because you're doing all these things, right? You're going from one vertical to multiple verticals. You're going from in-person to fully remote. You're navigating COVID when, we were raising a pretty large Series B during the pandemic before the vaccine had come out, right? And as a travel company back then.
How do you even explain it to VCs? Be like, please give us lots and lots of cash, even though 80% of our business has disappeared. Like that seems like a difficult enough pitch.
So we had already come out of COVID by that point. Okay. We had already navigated that and become growing and profitable. But yeah, it was hard. It was harder because we had only raised probably 20 million up to that point. And after that, we raised 85 million. So it was a big step up. And it was hard to convince people. And we probably got, I think, 140 no's. So yeah, that's why I don't recommend doing all that at once. But we got it done. And
140 no's. So you did 150 pitches. If not, some of those were probably multiple.
Probably more. Yeah, probably more. I mean, a lot of it was my co-founders. So I got to give them credit for grinding through that. But yeah, so it was definitely quite the journey and sort of perseverance and hustle and struggle. But we ended up doing it. But it was still hard because just a lot going on. And then you're trying to get a bank partner, and banks are notoriously slow. And then also you're fully remote and hiring people, and you try to launch new products 0 to 1 while being fully remote is incredibly hard. And then also, you raise a lot of money, so people think you're using that money to a lot of employees join you because they're joining a growing startup, but didn't realize that, you're actually doing a lot of things 0 to 1. So it's just a combination of factors all at once just make it really hard. That's why I don't recommend doing all that at once.
So let's say a few things. I want to talk about different products, how you decide to launch those, which ones you want to launch. Also, how did you, maybe let's talk about growing that team, right? How did you end up hiring the right sort of people who can handle that growth curve, who think they're joining some big established company. And then once again, as you said, realize, oh my God, it's 0 to 1 and I could do all this work myself, because you can hire the wrong people who have the wrong expectations.
Yeah, it's hard. It's hard. And I think it's all about, to your point, about expectation management, right? So if you hire someone who thinks they're coming in to scale a company, but they're forced to do 0 to 1, that's going to be very painful. And then vice versa. If you hire somebody who's a startup person to a big company, that could also be painful. So it's really all about expectation management. And I think you have to be really clear about, what stage and role you're at and then what they're coming into. And I think a common mistake founders make is, and I got this advice from some very successful late stage founders, is that startups hire executives who they're not ready for. Right. So back then we're a Series B-ish company coming out of the COVID with a lot of 0 to 1 products. But we were hiring, execs who were Fortune, not even Fortune 500, Fortune 50 execs, right? So it's just a big gap. And, I think they're very talented, but they probably weren't expecting to be finding PMF 0 to 1 with these new product launches.
Why were you hiring those folks? Was it because you were impressed by the resume? Did your board push those people? What was because the usual advice is to be careful for hiring people like that. So what was...
Yeah, I think part of it is probably we thought we were more ready than we were, and we wanted to appear more, I don't know, but experience or later stage or gearing up. And this is during kind of the whole SPAC mania era, right?
Yeah, so you're we're going to SPAC. We need the big name people.
Or grow into it, or sort of on a trajectory towards that. And it certainly did help with credibility, but also I think just the stage of the company and where we were, especially 0 to 1, it was just very hard.
Yeah. Okay. It's crazy. And so did you end up having to let a lot of those people go?
Not all of them. I think some people adapted, some people didn't, right? Some people self-selected out. So it's a combination. But yeah, I think definitely, we learned that it's really important to have leaders who have operational depth. So you can be strategic, but also get their hands dirty, roll up the sleeves. And there are some people who worked out great, people who are, leaders of public companies who come in and do really well, can adapt, and some leaders who don't. So it's just, I think a lot of it though is just manage expectations, making sure people know what they're signing up for and what they're getting themselves into.
Are there heuristics you use when hiring? So first of all, did you and your co-founder interview every single person, or is it just the senior leaders? Or when did that stop? How did you kind of grow the team, and how did your hiring change as you got bigger, or did it change as you got bigger?
Yeah. So I like to use this book. It's my favorite book on hiring. It's called the Who Method for Hiring book. Yeah, it's a great book, right? It's about very clear scorecards, expectations, competencies, and having a very clear interviewing process that scores for these competencies. It's been really transformational for our company and for myself, especially for leadership hiring. So that's kind of my favorite book or process on hiring.
So you put Who Method in place for the whole company and team. Was that pretty early on, or?
Probably after I had discovered it and used it, and then we made it more of a process.
Okay.
So we always have a JD and a scorecard and a sort of playbook for hiring roles, making sure everyone's really clear about what they're looking for, what kind of competencies they need. So that way we're hiring the right people with the right expectations. So we have that. That's been very helpful. My co-founder and I think we interviewed every senior or exec role, but I think after maybe around 100 or so, we stopped interviewing like every single individual roles. Because I also find it kind of challenging, and like maybe the sort of maybe in the post AI era, it's going to be different. But before AI, because you still need to hire a lot of people, right? Especially individual contributors. And what I find is if you have a co-founder interview in the last round, it gets kind of tricky because if everyone's happy with a person, but you like veto it, then your whole hiring team is very frustrated because they spent all this time hiring this person, recruiting them, and then you veto them. But if you don't have an opinion and you just rubber stamp it, then what's the point of doing it? So that was kind of tricky because you wanted to be in the process sometimes, but you don't want to be too late and veto it and we'll get sort of disgruntled, but you also don't want to rubber stamp it. So that was kind of a tricky balance.
And so that's why you sort of took yourself out of it at some point. You were just like, it's not working well.
Yeah, I think I think around 100 people is okay. And I know some founders do it until like hundreds of people, like a couple hundred people. But I just found it to be tough because, when you have 4 different layers between yourself and the IC, like it's hard to just go in and veto a last minute hire.
Yeah, no, totally. I mean, I think the ones where that works is if you as a founder are trying really hard to keep up a like really high bar. And so you're not really interviewing, of course, for the position itself. You're not interviewing the person for that. You're saying like, are they a cultural fit and will they be able to handle our methodology or our thought process and sort of how we build? And that's where it can be useful. But I totally agree. Like it's very time consuming.
Yeah, well, not just time consuming, but I think it's more about the impact on the team, right? Because if you like the only reason you would do it is if you like have an opinion that maybe differs, but that's a tough place to be in because if you differ with everyone else and if you're right, then sure, but you never have the counterfactual because they typically, right, if you say this person didn't pass the bar, you don't know if they would have passed if you hadn't vetoed it. So yeah, it's a tough one.
And also theoretically, you've impacted your team culturally already. So they're already filtering for the things they know you're going to like. So it should already be something you don't need to be in place for if you've set the culture correctly.
Exactly. And also we publish our cultures and values like on the job on the website. So people should know.
Then should theoretically, I find people don't always read things. They want to gloss over them. But okay. So are there other, beyond using the Who method, are there any other questions or methodologies or just like things you think are really important to do when hiring for a team? And how does it change once again, like early stage versus later stage that you just found were really different?
No, I think it's just a Who method. Honestly, we just follow it pretty exactly spot on to a T. And then we try to go in deep and just kind of, I think, just really try to dig multiple layers in, like if you say something, it's like, what do you mean? Like, tell me more. And you just keep getting curious and you see how deep did they actually go? Did they actually do the work or are they just kind of along for the journey?
So like the 5 whys almost.
A little bit, yeah.
And so that Who methodology it is for hiring. What about cultural stuff? Like what sort of culture did you build at Super? And what other cultures do you think are really valuable and work well at startups? Like, is there a certain mindset that you tried to embody as the founder?
In terms of our cultures and values? Or?
Yeah, the culture that Super has. Like how would you define the culture at Super today? Is that because of you? Is it because just like it organically evolves? How do you?
Yeah. I think we set some cultures and then we evolve them over time. Like we survey the company and what are we living and breathing, and which ones need to be adapted or refined. So I'll give you an example. So we had a culture we had 6 core values, but we had a culture of moving fast. Right. So moving fast was one of our culture's values from day one. And I think for the most part, yeah, we try to move fast, get stuff done, and ship and iterate quickly. But what happened was, I think there was a little bit of pushback on we were trying to move too quickly without being intentional, in the sense of we would do something, but actually it would take you less time in the long term if you were just a little bit more thoughtful about what you're doing versus just hacking on something and saving time in the short term. So we talked to a bunch of employees and a bunch of culture sort of reviews, and we actually updated it to move fast with intention. So now it's a bit of like being intentional about moving fast, so that way you're not just moving fast for the sake of moving fast, but you're being intentional about it. So that's just an example of how cultures evolve, and you get feedback and you sort of evolve as cultures.
How did that change with ship? I mean, one thing I find a lot of companies are bad at is they may have a million ideas as a founder, but following that idea through to completion is actually difficult, right? Like, oh, I have this great idea. You partially start on it, but then you don't really finish it. How did you manage that? Or was that not an issue for you guys?
I think it was okay, because we're very iterative and data driven. So if you have a hypothesis, you just test it, right? And you just say, hey, look, what's the easiest way to test? What's the least amount of effort I can do to maximize the amount of learning I can have? And you just test the hypothesis. And if it works well, you just keep kind of going at it. If it doesn't work, you just stop. So I think because we're data driven and we're consumer B2C, you have a lot of data to work with, and you can do a lot of testing and customer feedback to see. The other point I think the way we organize our teams, we implemented a sort of a cross-functional mission line team structure. So we would assign a person who would own the outcome and leader, and sort of own the mission of a certain cross-functional initiative, and that made it very clear who was owning what. And we have a saying which is the best way to not get something done is to make it many people's part-time job.
Right.
Yep. So if you have something you want to get done, you make it someone's full-time job and only full-time job, and not make it many people's part-time jobs. So I think that's the mantra we wanted to adopt, and I think that's been working pretty well. So yeah, there's no sort of this like no side hustle type of culture.
That's great. That's great advice. Something that we at Chore really struggle with actually is that we have a lot of people who are sort of doing small little projects on the side, and it's like none of those really get done at a high quality level. And so we've been having a lot of conversations about how do we change that and fix up the work that we're doing to get things done. And so that was the culture, growing the team, going back to product market fit in PMF and just like product in general. You mentioned, okay, COVID hits, come out of it, you're raising a massive B round, you started becoming profitable. How did you choose new product lines to go into, and how did you launch those in a smart, thoughtful way to actually make sure they were, presumably you wanted each one of your launches to be really successful?
Yeah. I mean, we looked at, we're a super data driven company. So being data driven is one of our core values. And so we looked at the data for our consumers and their behavior, right? And we saw that more than half of them were paying for travel using debit cards. Typically, you think of rich reward cards and miles and points, but our customers weren't doing that. And a lot of it is because they just didn't have access. They couldn't even get a credit card, right? So you think about this whole world of rewards, miles, points, benefits, etc. It's a massive industry. I think over half of Marriott's sales are from points, but yet our customers don't have any access to that. Yeah, it's massive. So then we're like, well, there's the big sort of gap there, and what's much more sticky, higher frequency engagement than owning the wallet. So we decided to get a bank partner and launch a card. That was kind of the first step of this sort of like travel rewards card product, but for people who are lower income, lower credit. So we did a bunch of smoke testing and got a wait list and got customer sign up. So
what's smoke testing, you said?
Yeah.
How do you define smoke testing?
Oh, it's just like you put up a screen, something that doesn't exist, and then you click on it and you measure. Because I think surveys are helpful, but oftentimes people will say they'll do something, but they won't actually do it. Yeah. Whereas smoke test is as real as it gets.
So it's almost like pre-sales. You're like, are people interested in buying this? Are they signing up for like a wait list or something for the product?
Exactly. That's cool. Yeah, we did that, and we got a big wait list, so we needed some demand there. So we decided to go on this journey of building out a product. And that was, I think we spent probably about a year and a half building out that product and suite of products. We probably spent a little too long because I think we should have launched it earlier. We made it a little bit overly complicated because it was like a secure charge card, not quite a debit card, not a credit card, and there wasn't quite no credit checks and interest and stuff. It took a little bit longer, got into market, and it was okay. But for us, it's all about kind of testing, experimentation. So we launch it, get feedback, look at the conversion rates, usage rates, and then we kept refining the product. And then from there on, we layered on additional products. We saw people like saving money, but what they loved even more was earning money. Right. So then we figured out ways to help our customers earn money through surveys, task games, activities, etc. So we added that on, and it all flows through the card and the wallet, and sort of bring it all together. So yeah, that's kind of the way we think about it, and just based on this series of experimentation, testing, iteration, data-driven measurement.
Yeah, that's great. And then so you launched that, and now is that the whole mantra for the company still? Just like launch something new on a somewhat regular cadence that we know is going to have high throughput. And is it just because the market's underserved for like the folks you serve it's an underserved market, or your products are prettier, better UX, UI? What is it?
I think it's a combination, right? It's a massive market. It's massive 100+ million Americans, and also it's just I like to think our products are pretty good and differentiated. We have some of the best savings and deals, and we have some really rich rewards, and we have some of the best earnings, right? So it's just I don't know, pretty good product too, and I think we spend a lot of time now on our UX and polish. So I think it's a combination of all these factors.
Yeah, that's cool. How do you define your own leadership style? Like, how do you define yourself as a leader? Number one. Number two, how do you compare that to other great, quote unquote, leaders that are out there? And then has your leadership style changed or evolved over from when you were a 19-year-old college, early college student to today?
That's a question. I mean, it's a high level term, leadership style. But I actually have a doc that outlines my sort of working style with everyone in the company. So I share it publicly so people know how I work and why I work. And I think it's helpful because it comes back to expectation management. If people know what to expect, then they're more prepared and understand why I think or ask questions, versus if they don't know, then it's like, oh, am I doing something wrong, or whatever. So I have a pretty open policy around that, and I think it's just concept of being curious, focus on the details, the things that matter. Sort of the culmination of your decisions are what drives outcomes. So yeah, I think it's just being able to think strategically, but also get in the weeds and be sort of on the ground, understand what's going on, and help make decisions that help push the company forward.
How do you do that as you evolve though, right? I mean, I assume when you're early on, you're really hands-on, you're building product yourself, you're talking to customers nonstop. When you're 200+ people, you're probably not doing much of that. Or maybe you are.
Well, you're not necessarily writing code, but you're still pretty involved in like looking at the product, the data, the analytics, the feedback, right? The experiences and the drop off. And so I was still very involved in like the actual like product and how it's performing and the behaviors and the patterns, and the synthesizing that and working with the team, the product team, the data team, the growth team to try to leverage those insights and make strategic bets.
Okay, fair enough. So like once you got through those pieces, you're growing it out. Like any other lessons learned that you think are like really critical to the success of Super where you are today? Other things that founders can learn from?
Any other lessons? Oh, I mean, so many. I mean, which areas, I guess?
I mean, so here's one. What sort of habits do you have as a founder? How do you break up your day? Like, how do you think through delegation? How do you break up your day? How do you focus on certain things? Because there's so many directions you can go as founder because you're getting bombarded with everything. So how did you actually choose what to focus on, which is, to me, one of the most critical decisions a founder can make?
Interesting. I think we actually had a pretty good process because we had a very rigorous OKR process, which I
really
share here.
Yes. I want to talk more about
that. It was actually okay. Like, there was a lot going on, but it wasn't, crazy. And I felt like I had time to be thoughtful and to think through problems and prioritize and focus. So, it was okay.
How early did you put an OKR process in place?
From day one. So
really?
Maybe not like day one, but like
early.
Yeah.
So who was running your OKR? Was it OKR? Were you like the main OKR kind of manager?
Yeah, for the most part. I mean, we had different teams and then managers, and then you would delegate it out to your reports and stuff. But yeah, we had it from day one. I think it's just such a powerful way to set goals and align outcomes and focus. So we always had this concept of like ruthless prioritization, because you can always do so much, but you have to ruthlessly prioritize. So what's your goal? What's your OKR? How you're tracking towards them? How you're measuring your progress? And then really, if it's not driving the OKR, then you don't really do it or focus on it.
Where did you get the idea to do that? Was it from your time at Google? I know Google's.
I think so. I think definitely was one of the things that took away, or one of the inspirations there.
Okay. And I mean, walk people through, like I found OKRs to be a great idea of what to do, but very difficult to implement properly in practice and follow through on and really make sure everyone follows. Cause like once again, so many things change. Like, oh my God, we got this new idea. And even today for a team, like we're doing some new pricing page updates. And so like this may sort of be an opportunity to launch a new product a little bit. And how do we market that? And now it's something like, okay, there's new tasks on my head of go-to-market bucket list of items you need to take care of. How did you like have the discipline was just as ruthlessly prioritized? Like how did you get good at that? And then did you hand that off to somebody at some point, like a chief of staff or?
Yeah, I mean, I think it was just maybe culturally, we were just always very ruthless on prioritization, and we were always pretty, I think, opinionated in the way we operate. So we want to make sure it's consistent across the company, right? Whether you're product and design, strategy, growth, whoever, you add OKRs. And we have a formal template. So I work with my chief of staff to formalize our OKR process to make it consistent company wide. So the same formatting style, same expectations, and same like methodology. And you have company OKRs, vertical OKRs, team level OKRs, and that flow down towards, and then you help people accountable for the outcomes and the OKRs.
And if they don't hit those outcomes, what does it mean you hold them accountable? Is that some people get fired sometimes, or?
I mean, thankfully, we never had to really fire people like one-on-one because of it, because I think we always had pretty good sort of structure and systems in place. But yeah, it means certain things, right? Like you can't change your OKRs halfway in the quarter, because what will happen is people are like, oh, looks like there's some macro conditions, so I got to lower my target. Right. So we don't allow any changes to OKRs up or down. Right. And they're all shared openly across the company. So it's super transparent. Everyone knows exactly what's going on, who's doing what, and that way you ensure accountability and transparency, and the people in the company kind of have a sense of camaraderie because they know, hey, like I'm working on my goal, you're working on that goal, and there's no like people just doing different things or unexpected people don't know what they're going, well, I'm working hard, you're not working hard, or whatever. Like, it's all public, it's all transparent. People know that they're being held accountable. And yeah, there's a component of the performance review that's tied to the goals a bit. It's not like a one-to-one tie-in, but yeah, it is part of it. And if someone continues to miss his OKRs, then that probably will relate to some performance conversation.
Did you do so? Okay, on that note, I mean, how do you do performance reviews at Super? Was it monthly, quarterly, annual?
We did it twice a year, and it was quite a process. Definitely one of the things I did not enjoy the most of running a company, but it's, I think, required. But yeah, we did the 360 with competency-based performance reviews.
Okay, so you would do those, and people would track it. And why biannual versus quarterly versus annual?
I think quarterly is a little too much, and is a little too infrequent, especially given the pace at which we're growing.
Yeah.
And then there was a cadence I think people liked, and because of how fast we're growing and how much like sort of the wages and the hiring and stuff, so it's a nice way to get people to feel rewarded for their work without having to wait a full year.
Yeah, that makes sense. And then so you see the OKRs in place. It's very impressive that you were doing that. Do you find a lot of other startups do that? I mean, do you advise with companies?
I think they do, but not in the early stages. If you're like pre-seed, seed, 3 people, you probably don't need it. Right. But once you have like 20, 10, 20, 30, 50, 100 plus, I think it's definitely highly recommended. And it made a big difference for us. Like it made a big difference, our operating kind of blueprint and OKR process. I think that's one of our core secrets of success.
Well, and on that, I would even maybe distill it further, which is like ruthlessly prioritize. How do you think you got good at that? Was that just something you've been good at your whole life of like, I'm just going to ruthlessly prioritize and ignore everything else? Or are there certain things that you think made you better at prioritization?
I think the OKRs were a forcing function for that, because you had a certain amount of time to do a certain amount of outcome, and you just couldn't do everything if you try to do too many things.
Yeah.
I think it was a good forcing function. I don't know. I think we just had this rigor and discipline of executing to our goals, and that's something we were always good at as a company, and we just stuck by it.
Did you set OKR goals for yourself, or were yours more like company-wide goals? Like, okay, we need to hit certain revenue target or margin target or something?
Mostly company-wide.
Okay. And so was that hard though? Like if it wasn't hit, like let's say your sales team misses a number, that rolls up to you. How does that come out for your own, you're doing your own performance review or something, or your co-founder's doing a review of you, like you're like, yeah, we missed sales. it was my ownership, but like it was really the sales team. How do you handle that?
I mean, fortunately, for the most part of the company, we've been pretty good at hitting our goals because we were pretty thoughtful. We never had to miss our goal by a lot, except for maybe like some profitability goals after like, or maybe not sort of, a certain amount of like EBITDA goal, or not losing beyond a certain number, after the sort of whole COVID, tech boom, where everyone's hiring hundreds of people and spending all this crazy money. So I think during that era, we got a little loose on our expenses, but for the most part, I think we were fine. And maybe that's just speaks to our ability to estimate and operate and sort of set good goals, but reasonable goals, and adapt and be flexible. But yeah, I think for the most part, we're okay. I guess if you missed multiple goals that were deep red, like way off the mark, then you probably have a tough conversation with the board about it.
Yeah,
But
I was gonna say you must be at that point. It means your planning process is wrong, and you're not understanding your business properly. On that note, actually, too, I wanted to ask, like, what was your board like in the early days? Did you have advisors to help out, or was it just like, hey, you and your co-founder? Then at some point, you raised enough money, you got a sort of quasi-professional board, and it's mostly your VCs. What did board makeup look like, and how did you manage that? Because board makeup can be pretty critical.
yeah,
Obviously, people get fired if they don't have a good board makeup sometimes.
yeah. I think, I mean, for the most part of the company, we were just pretty lean. It was our main investor and then two co-founders. And then over time, we expanded. So now I think we have two investors, two co-founders, and like up to three independents. And then currently we have one of the three independents in place. So that's kind of our board.
How do you choose the other independents?
So it's we as founders get to choose, and then the VC approves. So that's kind of the independent process.
That's cool. That's very cool. And then okay, so you've been in that, going back to like your own day to day. How did you? I mean, are you good at delegating? Was that something you did a lot of? Do you think it's a critical component? And how else do you set up your usual like day to day? You come into the office, quote unquote, come into the office. Maybe it's virtual, but like walk in from your bedroom to your home office or something. How did you set up your day, and how did you decide what to delegate, what not to delegate, and how good were you at delegation?
Yeah, that's a good question, and I think this is an interesting topic that's changed and where the perspectives change over time. I think I was probably, in the IC days, like mostly focused on building, so I guess not a lot of delegation. And then you hire people, and then you sort of learn to let go and delegate some more. And there's probably a trade-off where you're delegating too much, and then you have to get back into the weeds. And now, especially with this whole founder mode movement, I think it's become cool again to get into the weeds. So yeah, I think it's a balance. So I think overall, from my learning is, I think there's a lot of truth to founder mode and being intimately aware and involved in details that matter. Doesn't mean everything, right? But the things that matter. And I think that's something that I think we, as a founder community, learned to embrace, because there was always this sort of talk or advice of learning to delegate and letting go, etc., which is important, and it's important to hire good people. At the same time, I think it's also okay to be in the weeds, because at the end of the day, you're the founder, and you're just going to know things and care about things in different ways that other people aren't. And that's okay. And I think just learning to also embrace that.
That's true, although I do wonder how much, like, there's some things. I mean, look, obviously my own bias is that I don't think founders should be spending any time in like back office operations work, because it's not a core competency and it's sort of not your differentiating factor. Like, how do you think through those pieces, right? This is where the ruthlessly prioritization question too, to some extent. It's like, yes, there's a million things you can do, and there's a million things, you'll probably always be better at many of them than many people you hire, just because, like, for all the reasons you said, you're more passionate, you'll work harder, and you might have some more long-term knowledge about something. But even then, how do you decide what to really spend time on and what to really focus on? Like, is it just like only going to be go to market, or only product, or not the operations, like admin side, or maybe it is? Like, how do you choose?
Yeah, I mean, I think it comes back again to the OKRs, right? Like, what's the company OKRs? What's the priority for this quarter? And how does that roll up? And what are the areas that you can make the most impact? Sometimes it's the area that's struggling a little bit. Sometimes it's the area that needs to, you add fuel to fire. But I think it really rolls back to the OKRs and the priorities for that quarter, as a company, as a team, as a division.
So let's change topics a little bit and talk about AI stuff, right? So you and I were jamming together a few weeks ago about this sort of AI topic and how this is changing everything. And to be clear, if I'm correct, tell me if I'm right, like a few different things. Like one, you have a whole kind of website talking about like the like lean startups, right? That whole thing. So I want to be like, what does lean startup mean? Like lean AI companies, what is that? How is that changing things? Two, the idea that we're going to see, if we haven't already, arguably, companies of $1 billion plus in revenue with like one full-time person. And like, what does this look like? So what is the future of founding a company in the era of AI?
Yeah, that's a question. So I think you're referring to this. Right? I'm just sharing my screen here. You got the Lean AI leaderboard.
Yep.
So yeah, it's like a fun little leaderboard artifact that I put up to track super lean AI native companies that are getting to massive scales of revenue with very few people.
That's crazy.
So, right. So you have like, some folks about like Midjourney, 500 million, 40 people. Even some startups like Cal AI, calorie tracker, 12 million, 4 people. You got Mercor, you got Cursor, but you also have ones probably never heard about, like Chai Research or, Markable, OpenNet. So really, you're seeing more and more of these companies emerge in the last couple of years that are just growing very quickly from 0 to 5, 10, 20, 50 million ARR in a matter of a year or two. And this is not a lifestyle business, right? These founders work extremely hard. They're extremely smart and talented and motivated, but they're just building in a new way. They realize that they don't need to hire a lot of people, and they can still scale very quickly and get to revenue very quickly.
It's crazy. Okay, so what has changed to make this happen? Like obviously AI is sort of the high level answer to that, but like what is it? Is because you can do more with fewer people now? Is it because and by the way, actually, sorry, where can people find, like, just so
yeah, it was just leanaileaderboard.com.
Okay, perfect. AIleaderboard.com. You can get the info on these top AI companies. But so how is that? These companies are maybe the high level example, but like what have they done differently? It's because AI makes these new product categories in a sense, or like destroying different product categories. Like what has changed about the world with AI to make these companies a real value?
Yeah, well, I think one is just you don't need to hire a lot of people. And historically, the biggest cost of starting a company, especially in the seed stage, is people, right? You're hiring tons of engineers who are pretty expensive, and you're trying to find PMF, and you have limited runway. But now, if you can build things really quickly, you don't need to hire a lot of people, and your initial funding goes a lot further. And you can move so much quicker, right? So you can find PMF quicker by iterating, testing.
What's changed it? Like, why can you actually do that when you couldn't before? Is it because AI makes it so much easier to code now that you build more?
I think that's a huge part of it. Exactly. Being able to code and create products that otherwise would have taken you, 10 developers, half a year to build. Maybe now you can build with 2 or 1 and maybe a month, right? And that just shortens the iteration cycle time, and you can find PMF faster and scale faster. And 2 is also, I think you're seeing a high willingness to pay, both on the consumer and enterprise side, because everyone is so fascinated by AI. They know it's here. They're blown away by some of the capabilities. And I think it's also eating into the traditional spend of labor a little bit, right? Traditionally, software is selling, $5, $10 a seat. It's going to be pretty hard to get to, even 10 mil ARR if you're selling $5 a seat. But if you can sell sort of outcome-based pricing, and you can kind of sort of charge based on the outcome, right? People are willing to pay a lot more than just $5, $10. And that's how you're able to increase ACVs and get to revenues much quicker.
Do you think companies are going to be kind of destroyed because of that, or will they stick around? So maybe the example might be, does Salesforce stick around, or does everyone just spin up their own CRM with AI?
Yeah, that's a good question. And I think that's probably the $1 billion, $1 trillion question, right? And there probably is still staying power for some of these tools because, SaaS is generally pretty sticky and people are there's some inertia to change. But new companies, as they start and grow, like maybe they will be kind of using kind of different interfaces, right? Like just for example, I was using HubSpot for the first time this weekend just to play around with it as a SMB person. And I was like, oh, this is interesting. There's all these kind of the little mini micro SaaS things within HubSpot, right? But I was like, why would I learn how to use these micro SaaS apps when I can just prompt in ChatGPT and do like half of it, right? Potentially. So it is a little bit like, what does that future interface look like? So, and of course, the CRM is sticky, and so there's some staying power there, but what does that mean for workflow? So what does that mean for, micro SaaS? And if you can like one shot generate a, I don't know, DocuSign, right? What does that mean for pricing power?
Yeah. Yeah. Well, and so that's the question that a lot of people are wrestling with. And so what does this mean then once going back to like being a founder itself? Like is the whole focus in your mind, like for an AI first company, on your ability to quickly iterate on new ideas? Is that like what is the key skill set that makes these lean AI companies successful?
I think it's being able to use AI first and foremost for everything across the entire company. So really, truly AI first, AI native, whether that's engineering or product or marketing or growth, just using AI across the board. And then being really smart about like capturing the momentum. Like if you see a PMF and sort of training people on a page is really adding fuel to the fire and growing. Uh,
How do you what do you mean? Like what's an example of like you feel some PMF and you're adding fuel? Is it just like the standard like throw advertising at it? Like
yeah, you can throw ads on it, right? You can throw sort of standard performance marketing or growth, or you can do like charge businesses, and they have a much higher willingness to pay in many cases because it's so new and it's so disruptive, and then capitalizing on these sort of like higher ACV pilots and contracts, and then compounding that.
okay, smart. What do you and you think like founders themselves are changing when saying like it's like I want to hire fewer people, be more lean? Is that like mindset starting to become something you're hearing more and more from folks? Because like
Yeah.
it used to be like, oh, I built a big team and that was like a proxy for my
Mhm.
success.
Yeah. Yeah, I think so. And that's one of the things reasons why I wanted to build the Lean AI leaderboard is because I think now the old flex is look how much money I raised and how many people I hired. But I think as you see with the tech correction, right, a lot of times like people raise hundreds of millions of dollars, but the company really didn't do that well. And the founder didn't walk away with much and the investors didn't really make money. So now I think the new flex is look how much revenue I'm making with so few people. Right. I think that's the new flex. So instead of raising, I don't know, 20 million on a 100 million valuation with zero revenue, the new flex is making 20 million ARR with like 5 people. And and I think if you look at the founder, you're probably better off as a founder personally, financially, if you are making 20 million ARR with 5 people than you are raising 20 million, with a super high valuation but no revenue.
100% true. So sort of a sort of biased question, but does that mean that a lot of these companies are going to outsource and fractionalize like the work they need in other cases? Like, hey, you don't need a full-time internal person to do all these things outside of like the core tasks that make the business run.
Yeah, I think so. And I think you're seeing some of that, right? So I think you're like, yeah, why do I need to hire a full-time XYZ when I can just sort of outsource it? And a lot of it's starting with accounting, back office, bookkeeping, things like that. But
Yeah.
I think you'll see other functions being sort of fractionalized as well.
Yeah, no, that's certainly my take on the world too. Is more and more people are going to be fractionalizing. It's crazy to hire full time. Why would you do it when you can hire someone who's better, faster, in lower cost on a per dollar basis, maybe not per hour, but like you have to assume that the person you hire full time internally is utilized 100% of the time, which is also almost never true.
Mm-hmm.
But yeah, people, I don't know, I find it crazy. People love to hire full time for reasons that are beyond me. So, anyways, how do you, going back to the AI question, how do you, if you're a company who's been around for a while, not AI native, how are you embedding AI, let's say in super? Like, how are you pushing the super team to be super with AI?
Yeah, it's a question. So for us, it's a little tricky because I think AI is great if you want to spend money to save time, but our customers want to spend time to save or make money, right? And I don't know if AI fully solves that. So externally, we haven't done a lot of it, but internally, we definitely use AI a lot for our workflows, customer service, operations, etc. So we actually had an OKR, going back to OKRs, we had an OKR where everybody in the company had to use and document some AI use case or tool. So that way it just forces people to use AI and adopt it. I think a lot of times people just need to see it to believe it. It's like they're busy with their day-to-day, their usual habits. And once they actually experience AI, they're like, their mind is blown. And they're like, oh my God, I couldn't believe I was doing it the old fashioned way. So I think really it's just seeing is believing. And sometimes you just need to force it on people to experience it.
When you did that OKR, how did you verify people had actually done that? Did you do like a show and tell and everyone had to show their AI project?
Yeah. So we had a Google sheet that had everybody's name and a link to a write-up about what they did with AI. So literally it's like row by row, line by line. I had everybody do a write-up. And this is also a time when we were, I think, trying to push a written culture. So that way we had everyone, practice writing and documenting, because we're transitioned to fully remote. So switch into a written culture, and then during that transition to have written culture, and sort of line by line discipline.
That's awesome. It reminds me, we've done a few sort of things like that, maybe not the OKR style, but like show and tells, like almost like hackathons, like how are you using AI? We need to go do that ourselves more often. Okay, so that's awesome. In kind of the future of companies. On that note, then going back to the last part, I mean, how soon do you think until we'll see this company of sort of one, like $1 billion in revenue, one full-time employee? We kind of already have, right? I mean, tell me if this is right, but aren't like the Kardashian or the Jenner kids or whatever, all those ones, like they're not kids anymore, but like that family member group, right? They've started these companies like Skims or whatever the makeup one is, and one founder who's essentially a marketing genius, and get free marketing basically, then creates a whole line of products around them. That's all, of course, manufactured by third parties and run by third parties.
Yeah. I mean, yeah, you already have that, right? Like D2C brands, but they're not one person companies because they're maybe one person face, but they're not one person companies. They have a whole team, and they actually have co-founders too, that run the business and the operations. But I think here when I say one person, I also don't mean like literally one person in a room making $1 billion. I think it's just like a super lean team. I don't know how lean Skims is, but I imagine they still have a pretty sizable team to manage all the warehouse operations, etc. But yeah, I think probably the closest might maybe Telegram. It's like 30 people making $1 billion a year, and I think last year they made 500 million in profits. So you already have some semblance of that, and I think you see some of this more in the crypto world. We have super lean teams with crypto that make a lot of money now. It's low crypto, so the accounting may be a little fuzzy, but yeah, I think with these, as AI gets more and more powerful, and as they can do longer and longer, more complex tasks, I think inevitably we're going to see more and more leaner teams that have significant revenues, and it's going to change the way we think about fundraising, capital, startup building, company building, etc.
I think it's also going to just change what it means to be a company in general. Like I would imagine a lot of the big companies that exist today are going to, at minimum, they really already have like slow hiring. They're expecting higher productivity out of their teams. And over time, they just don't hire new people, and they kind of shed the number of people that they have.
Or they only hire really senior people, right? So, what is the impacts on society if this happens? That's a open question, which I think is what the AI safety people are working on. But yeah, it is. I think we're seeing a lot of that. A lot of the companies are now not hiring junior talent, right? And the job market is pretty tough if you're a new grad.
Yeah, it's really tough. It's a scary societal impact. I'm longer discussion at some point, but I'm kind of pessimistic for the short term, very optimistic for the long term. I think we're going to be in a kind of crazy world of abundance that we can barely even imagine with sci-fi world of abundance in the next 15 years. But man, the next 10 years to get there is going to be a rough ride. So speaking of that, maybe a little bit, maybe it's a good sort of segue into the last sort of segment. We'll come back to one question I still want to ask you, but on the note, like, how do you think through like work-life balance or unity, or like how do you deal with that? Like, what does that even mean for you to an extent? Today, you yourself today, but also when you are very deeply involved with Super.
Yeah, I think that's a question. I mean, I've always been really passionate about my work and role and making an impact. So I think it's actually most important to have some sort of mission or drive or calling, because that I think is what truly motivates me, at least, and gives me joy and excitement to feel like you're working towards something and making an impact and have some sort of mission or goal or sort of the journey itself, I guess, rather. And so that's kind of how I always thought about it. I think the traditional sense of work is work and life is life is okay, but I'm not sure how much it applies to founders and entrepreneurs, because I think typically if you were to be a founder, you must really enjoy what you're doing. Otherwise, you wouldn't make it. Otherwise, there's probably easier ways to make money, and certainly, it's a long grind. So for me, it's always about like doing something that you're passionate about, making an impact, and that's why I've always felt, I don't know, joy from doing the work and being part of the journey.
Yeah, and is that for you? I mean, what do you think when you invest in companies, talk to other founders, or maybe for you and yourself? Are there sort of an hour number? Like, were you like, I'm working 7 days a week, 10 hours a day? Like, what is your schedule look like to build something like a Super?
I mean, it was okay. I mean, it was fine. I mean, we worked hard, but we had people, right? Good teams and good ownership and good leaders and good accountability frameworks and good OKRs and goals. So it was fine. Like it was, I don't know, maybe like I don't know, 60 plus hours, but nothing crazy.
Okay.
But of course, maybe when we were starting out, we were doing a lot more. But over after 8 years, and you're still working hard, maybe 80 hours. I don't know. But also, I don't really count because sometimes it's like light work. It's like you're catching an email, you're doing some customer research, you're like poking around with some competitor apps. Like, is that work? Is that not? Like, it's fun, it's curious, you're learning. So, yeah, like it was fine, but I don't think we were like super hardcore about it.
Are there any founders that you sort of like great founder CEOs that you try to emulate or think about, like, like a Bezos, Elon, Jobs, like any folks you're like, man, like these are people I've read about and I want to kind of emulate, or be like, I definitely don't want to be like them too, right? You may be like, I have no interest in being a person like that guy.
Uh, Yeah, it's a good question. I mean, I think Elon Musk before was quite I mean, he still is to a many degree, but I think now with all this stuff going on, so it's becoming a little bit polarizing. So
Yeah.
I don't know how I reconcile all that.
It's
But
tough. I have the same challenge. He's a great entrepreneur, but there's a lot of other things that make him difficult right now.
yeah. So I just don't even know how to reconcile it. So I think you end up just finding your own style. I think there's I'm probably more of a I don't know, call it like executional, like iterative style, get shit done entrepreneur, less of a mm, kind of crazy sort of pie in the sky visions style entrepreneur. Although I think this time around, I'm trying to be a little bit more intentional about that longer term vision. I think one of the trade offs is we were maybe too hyper rational and hyper data driven at super.com. And now this time I'm trying to be okay, a little bit more like let's think about the end state, what's the worldview you want to have and then work backwards. So you have a bit more of that, visionary sort of what's that worldview you want to take or future world state. So but yeah, that's kind of I mean, I guess to answer questions, like you develop your own style over time and then you kind of see what works for you and what you enjoy.
Can you give a preview to anybody, to folks, about what you're thinking about next? Like what does the world look like in the long-term future you want to help build?
I mean, that's a good question. I wish I knew. I think there are some pretty obvious problem areas. Right, like right now, only 0.3% of the world can code, and of that, maybe 1% got into YC or traditional venture funding. We're talking about 0.003% of people, like you and I, right? And for every one of us, there's probably thousands of people who are motivated, driven, ambitious, who want to build stuff. And for the first time ever now with AI, they sort of can, or start to be able to tinker with stuff. So what does that look like? And what does this new world of entrepreneurship look like when you don't need to hire a lot of people? Anybody can build something and hopefully get to revenue pretty quickly. What does that world look like? And I think you have a worldview with chore and back office and automation, right? But it's a massive space, and there's probably a whole entire economic engine to be built. So it's not just one company; it's like a whole economic engine. But yeah, I'm really excited about that. What does that look like? And what does entrepreneurship look like with AI-enabled lean entrepreneurs? So I don't have an answer, but that's certainly exciting. And I think the sort of the path is more and more towards that.
Yeah, totally agree. What advice would you give your younger self if you could give your first company starting off, and your younger self called you up today and said, "Hey, Henry, tell me what I should do better or differently"? What would you tell your younger you?
Yeah, I think it's probably just work with really good people and work with people who can really help you grow and elevate your growth and career, right? You think about the PayPal Mafia, the Palantir Mafia, like those networks are really, 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 really powerful. And if you can get into sort of, those networks and build the networks and be part of the network early, you can get sort of fast tracked or elevated to your career and your journey, whether that's entrepreneurship or being an exec or somewhere else. So I think just surrounding yourself with great people.
Yeah. Do you have any advice yourself surrounded by good people? Like, how would you do that? How would you go about giving yourself advice to actually, it's easy to say surround yourself with people. It's another different story to actually pull that off.
Yeah, it's a question. Probably just getting out there and meeting a lot of people and learning and being curious and asking for, any intro relationship, networking, whatever you can to try to learn and sort of build these circles. But I think also part of it is just doing great work, right? Like proving yourself and your value and what you can bring, and then taking those opportunities to kind of showcase your value and work with some really incredible people.
I totally agree. I think it's an underlooked skill to just stick with things for a long time and build a good reputation, good brand for yourself individually, because you're just a hard worker and good at what you do. So many people bounce around so fast, like I'm going to go from this or this to this, and you hurt your career and yourself by doing that too much.
Right. Well, it depends on how, it's a risk, but yeah, it can be good or hurt a little bit. But also maybe one of the things is you should also, I think I would have built more in public earlier. I think maybe I wasn't used to it, or maybe wasn't sure, or didn't, imposter syndrome or something. But I started to do a lot more writing and building in public after sort of stepping back to the board of my company. And it's been great. Just like people get to see how you think and your experiences, and you kind of create awareness, a little brand for yourself. And that's been incredibly helpful and eye-opening. So I think probably just doing that earlier and compounding earlier would have been helpful.
And I guess maybe for you to some extent, is it also being in San Francisco for a long time? I know you have your Is Henry in San Francisco tracker, which I find hilarious. And it's like 99% of your time in San Francisco the past 30 to 60 days. So
I mean, my SLA is 95. I think I'm at like 93. I don't know. But yeah, it's being in SF certainly helps, right? Like geography is still a big factor on sort of your social circle, your network, your professional, personal, friend group, etc. And that really has a compounding effect sort of throughout your life.
Yeah, I give young entrepreneurs that advice all the time. It's like, look, the life advice generally, the people you surround yourself with is how you're going to kind of live your life and what you will become in general. And the way to do that then is surround yourself by good people. Go to a place where there are physically lots of people you want to be like. Right. That doesn't have to be like tech people, but if you want to be in the tech space and want to be a great entrepreneur, you probably should be surrounded by lots of them. Yes, they are competitive. Yes, but they will also help you a ton and help you grow things. And so that's a place to be.
Exactly.
So the last question I like to ask everybody is, if there's, and it's related to sort of something you answer, but hopefully it'd be a slightly different answer. If there's a single piece of advice that you would give to every entrepreneur to be quote unquote excellent, what would that be?
Be excellent. Oh man. I need to think about this. Probably just being consistent and compounding on whatever you do, right? The power of compounding is like the eighth, compound interest is like the eighth wonder of the world. I think it truly is. And when you look ahead, your goal or ambition might seem insurmountable, but then when you look back, you're like, wow, this is just the power of compounding. Like I remember when I first started the company, I was like, as a 22-year-old, if one day somebody were to buy the company for 100 million, that'd be amazing. Right? But ironically, nobody wanted to buy us. So we just kept growing and growing and growing. And now we do more than way more than 100 million revenue a year. Right. I never even thought about that. But it's just the power of compounding. And if you can consistently do something and become 1% better every day, it's super powerful.
Such great advice. It is compounding is something I also talk about a ton. In fact, with the world markets melting down around us when we're recording this, I actually try to tell my team that I'm like, look, this is the opportunity where because you can compound, like, don't worry about your investments. You're all going to have 20, 30, 40 years left in your career. It's all just going to compound. And this is scary, but it's just a blip. And if you let it compound financially, but also, as you said, career-wise, it all just builds up and keeps getting better, but you got to stick with it. Mm-hmm. You can't sell, buy again, do all that. Just stick with it. There are costs that you can't compound if you're increasing your costs by making too many changes fast. So Henry, you kind of mentioned it. You like to write, you like to explore different avenues. Where can people find you? Where can they learn more? Where can they follow your journey as you figure out what is the next big thing for you, but also in lean AI world?
Yeah, sounds good. I mean, I write a lot on LinkedIn, Twitter, and now Substack as well. So you can find me on these channels.
Where on Substack?
It's just my henrythenine.substack.com.
henrythenine.substack.com.
Yeah, exactly. So yeah, you can send sort of the links after, but yeah, LinkedIn, Twitter, Substack, and it's just a collection of thoughts and experiences I learned growing my company. And I share pretty open behind the scenes learnings. And then also kind of what I'm seeing in AI, how I think about the new wave of AI tools, automation, entrepreneurship, etc.
Amazing. Henry, thank you so much for your time. I sincerely appreciate it. It is a gift whenever you can share it with someone. So thank you. And thank you. Appreciate it.
Yeah, thanks for having me.